2017 is ending today, and we're going to look to the future and tell you what FY18 holds for the cement industry. Bina Engineer, the director of Sanghi Industries, joins us on the phone line to give us a sense about the situation. Good morning, ma'am, and thanks so much for joining in. You know, before we get chatting about the next year, just to understand how the quarter has been. When we last spoke to you, it was, I think, around your numbers, and that time you indicated that the pricing was under pressure. So in January and February, we saw cement prices correct. Could you give us a sense of what the trend has been in March and what you expect in April, and therefore for Q4, how would the quarter-on-quarter cement realizations look?
Yeah, good morning to you.
Good morning.
And you are right that the whole of this year, beginning from April till March, has been quite topsy-turvy in terms of cement pricing. April to June quarter this year, we had seen about a realization of 5,200 rupees. From there, by January, February, it had dropped to 4,200, which was almost a 20% drop from the beginning of the year. In March, I think we have recouped about 12 to 13% from the bottom, which was in Jan-Feb. So we had a realization average of about 4,700. Now, in the month of April, probably a price hike of about 5 to 7% is expected. So hopefully this April-June, that is the first quarter for FY18, we should be able to recoup the similar price levels as we had seen in the first quarter of FY17.
All right, ma'am. Thanks so much, ma'am, for joining in. So that point's well taken then. In March, we saw an increase of close to 12% in comparison to Jan as well as Feb. Now, for the quarter, if I compare this quarter with quarter 3, how were the prices? Were the prices higher? Because you indicated they were lower in Jan as well as Feb. So can we take that on a blended basis, it was up by what, 5-7%?
No, actually not so. On a blended basis, they would still be slightly lower at about, say 4 to 5% compared to the immediately previous quarter.
All right. So you're saying that realizations in this quarter 4 will be lower than what it was in quarter 3?
Yes, because as I said, Jan and Feb has seen the lowest prices in the whole of the year, which will form about 2/3 of this quarter, and they have only recouped in March. So on an average basis, we would still have a lower realization for the quarter of March compared to quarter of December.
Is this the first time, I've been looking at the cement industry the last few years, is this the first time when quarter 4 realizations will be lower than quarter 3 realizations in some time, I guess, in a few years?
Absolutely. Mainly, I think, the demonetization effect and the shuffle in the mix between the trade and non-trade happened in the Q4 instead of Q3. Q3 just sailed through, and for people like us, we also had a significant export quantum. But in Q4, we have done 25% higher volume than Q3 in domestic cement. So you can see that there was a complete thrust on the volume side. At the same time, it had an impact on the prices.
Right.
Okay.
There was also a change in the mix between trade and non-trade. So the trade segment had narrowed down, shrunk, and the non-trade segment was larger, which anyway fetches you lower realization. So on an average, you are absolutely right that the March quarter was probably one of the worst March quarters that we have seen in terms of pricing. But not so in terms of volume, because volume on a Q-on-Q basis, we've seen almost 25% improvement.
Oh, okay. So 25% quarter-on-quarter improvement in volume.
Domestic sales.
On domestic sales.
Yeah.
Fair enough. Ma'am, so what will all this mean for your EBITDA per ton in the March quarter? As far as we remember, I think in Q3 it was around $535 per ton. So if you could tell us what the March quarter may look like in terms of your EBITDA realizations?
I think it would be too early to predict. Okay. But the prices have been on the lower side, so that would have an impact on the EBITDA margin. The costs have stabilized, so let's see how the numbers turn out.
All right, ma'am, so we can safe to say that there will be no improvement in the EBITDA per ton for the fourth quarter.
The only change that has happened from Q3 to Q4 is that instead of export of cement, we have done more of domestic cement volume.
Okay.
So that may help a bit.
All right, ma'am. You're saying your domestic cement volumes is up by 25% in comparison to quarter three. But in quarter three, ma'am, I think you are functioning at what, 50-60% in terms of your cement capacity utilization. And I think in terms of clinker, you were pushing more amount of clinker. So it's coming rather on a lower base. On a blended basis, will volumes be higher? And if yes, by how much on a quarter-on-quarter basis?
So if I take March 16 and March 17 comparison, we would still be up by about 4% or so.
Okay. By the way, the stock has slipped a bit from the high point of the day on the back of statements coming in from the management about how realizations in the March quarter could be lower than what we've seen compared to the prior quarter. But I think we've completely run out of time. So thank you so much, ma'am, for taking the time out and joining in. We'll keep speaking.